Hello, everybody. It's Bob Anderson, and I'm going to do a video about one trade and one trade only that I took three of them today. Today is April 11th, 2024. And two of them worked out real good. One of them I got out at even though the trade worked. I'll show you that. But anyway, what I wanted to do is I wanted to put this video together, and it talks about the overnight open. Okay, so what is the overnight open? Well, the overnight open is I'm going to talk in Eastern Standard Time, New York time zone. I know a lot of people in futures talk in Central Standard Time because of the old pits and stuff like that. I get that, but I'm talking in Central Standard Time. So what I'm focused on is the overnight open price, which is the price at which the futures market for each instrument opened at 6 p.m. the day before. So today being April 11th, the question is, for example, on gold, what price did gold open at 6 p.m. April 10th? Because remember, it closes at 5 p.m. Eastern Standard Time, opens back up after an hour of the market closing, and then boom, it's opened up again. And that price, for example, today is $23.51 and 70 cents. Gold has really had a nice run for it. I wonder why. Oh, because the government keeps printing money. Yeah, that's exactly why. Anyways, so same thing with Bitcoin and all that stuff. But anyway, so here's the deal. So that opening price is a very powerful point on the charts. I don't find anybody ever talking about it. I talk about it incessantly. I even revolve my other trades around it so that I don't even allow myself to get beat up by it. So what I want to do is I want to spend a little bit of time. Sorry, my phone messages. I want to spend a little bit of time talking about this one trade. So between this video and the one I did last week, which I'm going to link it below, between those two videos, I'm going to tell you right now, if you take those and study those, you can be profitable trading. And if you pay Apex $30 or whatever, you can have your Ninja account and you can set it up and you can be trading that. I got my link down below for my affiliate code for Apex. If you get an account, use my coupon code, my affiliate code. It gives you the coupon for the best deal, blah, blah, blah. All right. And it helps support the channel. So let's talk about the overnight open. Again, we've ascertained that it is the 6 p.m. opening price. So for example, in oil, the 6 p.m. opening price yesterday was 86.32. Okay. 6 p.m. opening price, 86.32. So $86.32. Why is oil $86.32 instead of $35 like it was 3-4 years ago? Well, because again, we had idiots printing money. So let's talk about the overnight open. There's keys to this, and I need to get these keys across to you. One is time since the last touched the direction of your trade. So what do I mean by time since the Well, let me go over the three of them, then I'm going to show you. Okay. And then, so time since the last touch of that line. Remember, that line goes straight across. It never changes. It's that same price from 6 p.m. until 5 p.m. 6 p.m. the night before till 5 p.m. the next day. It's that line. That's it. There's no moving averages. There's that line. Okay. Then you want I call a reach pullback. That is where you can see price reaching to that line. I'll show you some examples of that. When you see price reaching, then I call that the slingshot. That means they're pulling the slingshot back. And when they get to that line, all the traders, the algos and whatnot, they have everybody trapped because they have you thinking, for example, if they take it from the top, they have you thinking it's going short. And then what do they all do together at the same time? Whing! They let that boomerang go, and phew, off they go the other way and clean. And what accelerates that? Well, what accelerates that is all the traders that don't know anything about this overnight open having their stops stacked up, above candles and whatnot. Think about this. As price was running down, they got their stops there, and then it reverses and it just cleans them out. So you got those buying because they know that slingshot happened, and then you got those selling out of their short positions because they're getting railroaded. All right. So those two things together helps reverse the market and the trend. And if you get in at the right spot, you can be in that trend. All right. So let's talk about this. So a reach pullback, that's number 2, and then time of day, number 3. What does time of day mean? Well, there's 2 things you got to watch out for with the overnight open. Okay. One is, of course, like when the market opens, when the market itself opens. So you got to know the opening times of each of your instruments. Okay. So for example, if you're trading oil, it opens at 9. Well, if the overnight open is around there between like 9 and say 9:45, honestly, I give it a good cushion, 9:30, 9:45. I mean, you really want to kind of stay away from taking overnight open trades until the market goes into what I call a rhythm, when it starts getting rhythmic. So it's beyond the noise. The other thing you got to avoid, of course, time of day, is every day has news, or may have news, I should say. And if you have news, then you need to avoid, trying to look at any of these trades during news too. Okay. The other thing is, let's talk about oil for just a second. Okay. Oil is a good example of something I need to put a caveat in here. Oil, traditionally, when there's no holiday during the week or whatnot, oil traditionally has oil inventory report on Wednesdays, normally at 10:30. You can Google it every week to see when it is, but there's a calendar for it. But oil inventory report is extremely important, in my opinion, because I won't trade any of my trades until that oil report is over, because the movement that I'm anticipating the market to give me for my trades with oil, I need the big players to be playing the market. Well, they have a tendency to avoid oil, in my opinion, when in the early mornings, 9 all the way to 10:30 until the inventory report's over, and then once the inventory report's over, it calms down. It'll start getting into. Sometimes it'll get into some really good trades. But anyway, so I avoid oil on Wednesdays until after that. But anyways, so time of day is important. No news. Not near the open of that instrument. Like, gold is in the open is at 820. Be honest with you, you really want it to get out past even the equity market opens and that kind of stuff, because gold can be influenced by this the stupidity going on in the market sometimes. And since it's kind of thinly traded, it can be manipulated really, really hard. So anyways, so that's the caveat. So let me show you what I mean by time since, okay? Because that's kind of important. Time since. Let's talk about issue number 1. Time since last touched direction of your trade. So let me get rid of this stuff here for a second. Let me get rid of all that. And let's just do overnight open right here. Okay, that's the overnight open. Whatever price that is. Oil, 86.35 or whatever it is. Let's just say it's oil. And so what we want to do is time since. So let's just say price has been hanging out up here. All right. And we get past, 10:30, whatever. Okay. we get past, so now we're like kind of focused on the overnight open possible trades. And it comes down and it goes boom right through it. Okay. So we don't even get a potential entry to the long side. But somebody might say to me, well, because remember, what we're looking for potentially is it to go down here in V shape back that way for a long. All right. Now remember, I said the issue is time since last touched in the direction of the trade. Okay. So if you get a pull through and then a rotation back to here, okay, this may be pretty close in time. Maybe 15 minutes later, maybe 20 minutes later, maybe whatever. But what you got to recognize is that many times market makers, when they see a break point, they like to break it and then retest it to clean out all the people, all the traders that jumped in on the bandwagon, and then reverse it back. So what you're looking for, because this trade was supposed to be to the long side, not to the downside, this one right here, when it went across that line, you're not worried about that. You're not worried about the fact that it happened just recently, because it's not in the direction of the trade. This is what I call a crossover retest, and then boom. Matter of fact, that was one of the trades I took today in RTY, was a crossover retest, and you'll see what I mean. And so, so that right there would be a valid potential, as long as it meets the other rules, the smooth pullback, blah blah blah. We'll talk about that in a second. All right. So, what other potentials? Well, let's go back to this. All right, let's go back to this right here. All right, let's go back to this right here. This situation where price came in, pierced it, and then was going to potentially go that way. So the question is, when you're here, how far this way was the last time price touched that spot from the top down? You may look way over here, and at 2 a.m, price just blew right through it. It never did. Sometimes you'll see at 2 a.m, it went across, did this, and then did that. So here's your touch. Okay. And then it created all this price action up in here and then came back down. Okay. So what you're looking for to your left, I can't express how much looking to the left is important in trading, because if you see a pattern from the left, it's easier to recognize what's going on right now. I can't stress that enough. So anyways, so if you see that you have not been here for multiple hours, so that's about the best I can give it right this minute, multiple hours, then the likelihood that this sling and reversal is going to work, the higher the likelihood, in my opinion. But if you look to your left and you slam there, say 30 minutes ago or an hour ago, you might have a problem, because what you might find is, let me show you what a problem is. Okay. This is the problem you might have. This is the problem you might have. And this is the kind of stuff you got to kind of learn. It's a little bit of price action, but you can be conservative and not have to worry about this stuff as much. But is price was hanging out over here like this, and then it slammed down and then retreated up. But then price hung around over here, and then it slammed down again. Okay, and the difference between here and here is, let's say, maybe an hour. So got to be a little more cautious here, in my opinion, because what you've done is you came from this area to here, And now you're coming from this here area to here. As those pivots from the top down keep pushing price, the likelihood that you're going to rebound here and eclipse this back up to this gets less likely. Okay. That's kind of, it might be a little confusing to people, but you'll see patterns. You'll see what I mean. Okay. I'm going to show you some examples. But anyway, so what I'm going to do is I'm going to show you how simple it is. The three things that I have on the chart that help me out with this type of trade. Okay. I just use three things to help me out with this trade right here. Okay. The overnight open. All right. So let's go back, and what I'm going to do is I'm going to show you some charts here in a minute, and then we're going to go over that. And then, and I'm going to show you the actual trades I took today. I mean, I screw things up, folks. I took a gold trade today that I got off the overnight open that I got shaken out of because I made a mistake on the entry because I was too busy dealing with my phone and things like that. But I made a beautiful trade in RTY. I made a beautiful trade in the NQ. Absolutely gorgeous trades just off this system right here. This trading philosophy right here. And and the thing is the wins are big. I'll do the math here in a minute. I can't remember the trade I got in the trade I got in the NQ. You're all going to look at me and think I made this stuff up, because I literally got it from the entry point to the target point, and price rolled over. How the hell did he do that? I'll show you. Anyways, so let me show you on real live charts what this looks like. Okay, just a second. Okay, so let's talk about one of these trades. This overnight open. Okay, this is the classic setup right here of the overnight open. And it's an incredible potential swing trade too, but I'm going to show you what I did with it. Okay. So let's talk about the settings for just a second. This is on Ninja. So you got three things on your chart. Three things. That's it. Okay. I'm going to talk about what the other two are. I didn't talk about it here. I'm going to talk about it here so you can see it. So the first thing on this chart is a current day open, high, and low. So you got the open price, which is the one we're focused on. You got the high of the day, you got the low of the day, which is not really relevant to this trade, but it can be. And I'll explain that in a second. So you got the current day open is the one we're focused on. Next, I have on my chart, this is for visual purposes. This is to help me see some things, and I'll show you what I mean in a minute, okay? But this is the 9 EMA, 1 minute 9 EMA. Very important, 1 minute 9 EMA. That's what the previous video that I got down below, I talk about. I talk about how to trade the 1 minute 9 EMA. And that you can just have just that line on the chart. Matter of fact, you could have just that line on the chart and just this overnight open on the chart. And that's all you need, really, at the end of the day. But I'm going to explain to you why I have the third line on here in a second. So it's a 9 EMA. I've got it set right here, period 9. And I got it gold, and I got it kind of blowing up a little bit, with a width of 3 so I can kind of see it better. I'm getting blind as I get older, seriously. So, and then next is my SMA, which my SMA on my charts it's off of 5 minute data. But for simplicity purposes on this chart, I put it on at 105 periods, because what it's simulating a 21 period 5 minute SMA, which is supposed to be the slow moving elephant. Okay. You'll see the reaction on you. You can probably see it right here looking at these charts. Why that line is on there. So, anyways, so I have that on there as off 1 minute data at 105. So those are the three lines. That's it. That's all. That's all you got. Okay. Now, if you use the video that I talked about down below, you would have the donkeying channel on there also, which I can see some donkeying channel. What's going on here? I can see some donkeying channel trades right here. 1, 2, 3. I mean, I can see some donkeying trades right there before, but that's in the video down below. So anyways, so let's talk about the overnight open. This is a classic setup. Here's where the market opened. Right here. Here's where it opened the day before at 6 p.m. It opened at 183.75. Price rolled down, price rolled up, price rolled down, price rolled up. Okay, so from the top side, when's the last time it touched? Well, way over here, which was at 4:50 in the morning. This time right here is 10:17. Okay, so 10:17. There was news at 8:30. That's this craziness. There was the market opened at 9:30. So we got 9:30, and we got about 45 minutes past that, where we had, market acting crazy and stupid. Okay. And then we had this setup, which I'm going to talk about, which is the smooth pullback. You haven't been here in a while, blah, 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 blah. Okay. So this is a classic setup because we had a crossover, and this is the first time that we sat here. And it was after a big, significant crossover. And then what did we do? We went from here to here to here to here. I mean, we reached down to that trade zone. We reached down to that trade zone. And where was my entry? It's kind of hard to see, but my entry was right here. One tick above the close of these two candles right there. That was my entry. Okay. So what was I trying to do? Well, I was trying to make money, but what I was trying to do was I was trying to, at least this is kind of where trading can get a little difficult, because you've got things that are working against you, but you got things working with you. So let's talk about the power of these lines. In my world, the most powerful line on this chart is the overnight open. In my world, the second most powerful line is this 105 SMA, the 21 5-minute SMA. The third most powerful is the 9 EMA. Okay, that's why the 9 EMA is really, I call it the rabbit. It's the rabbit trade. It doesn't have a lot of power, but boy, it can in trending, it can keep you on the right side of a trend. Okay. But it's not the one that's going to turn the world around. It's not the one that's going to change the market direction. Okay. The overnight open is going to change market direction. You can see that right here. Where was the market from here, which is at 10 o'clock to 10:16, which is 15 minutes. The market was down, straight down. And that was a significant down. Okay. A very significant down. So, how significant of a down? I don't really remember. But anyway, so what we got is we had the rules. Have we been here recently? Nope, not since 4:50 in the morning. Okay. All right. That's good. Are we past the open and the news and all that stuff? The open's at 9:30. The news was at 8:30. The answer is yes. We're past all those things. Did the market have an intentional uh, reach to that price point? Well, if you look, here's all that consolidation after the news. And then here's the slam up, slam up, bam. So the answer is yes. Okay. So what's the trade? Well, the trade is to take it along off the break. Now, where you got to get kind of concerned on here is like what this is where a battle begins sometimes. I mean, there can be some big time fighting and whatnot. You'll see it in gold when I show you the gold trade I took. So there's you'll see it in RTY too. Okay. But there's big time battles going on here. All right. So I take the break because the other thing is if the market continues in the direction to the downside, then when it does go through that line like it did here, it'll flush. So you don't want to be way off in the distance with your stop or anything crazy like that, hoping that line's going to hold, because it will flush. Look at that. Flush. See that? It'll flush. Just like it did there. It flushed through and it flushed through. Okay? So what we're doing is we're sitting here and going, okay, I think the battle's going to be won. I'm hoping. Market was up, came back, did a retest, and we had a battle here, and then boom, there's the long. Okay, so I had my entry one tick above the close of these two candles. The mere fact that this candle, the green one, opened and closed inside the range of the candle to the left, that got me even more excited. A lot of you guys may know that it's the inside bar. When the break of that inside bar, boy, that has a tendency to tell you the direction of the trade. But that's another conversation. It wouldn't have mattered to me even if we just had this red bar. I'd have had my buy here as soon as this candle closed. Okay, so this candle opened up down. This one here, and opened up down here. Boom, we got in. Wham, it went up. Now, what's the problem? I'm going to tell you one of the problems. Okay, as you're reversing, which is what the overnight open is, it's a reversal of the direction. You're all of a sudden slamming on the brakes and turning it around. But when you do that, one of the things that's going to come and slam you in the head is going to be that 9 EMA. Okay, and that's where you got to have the confidence that this overnight open is stronger than the 9 EMA. Okay, again, rules of power. The overnight open's more powerful than the 9 EMA. The overnight open's more powerful than the 21 SMA. Okay? So, trade goes up, comes down. I moved my stop below this candle here. Trade goes up, goes down. We haven't broken either of these tops. Once this candle broke up here, I mean, boom, I had my stop here. That's exactly where I had my stop, was right here, when this candle right here got broken by this candle. Now, let's talk about how did I manage this trade all the way to this magical spot right here. Wow, that's amazing. How did he do that? Well, sometimes you get lucky, first of all. Second of all, once you have a convincing break through that 9 EMA, which is what we had right here. That's exactly what I'm looking for. I'm looking for a convincing break through that 9 EMA, and then hoping that once that happens, that the 9 EMA is going to work in my favor, which is supporting my trade now instead of resisting my trade. Am I making sense? When you're north of it, it's going to push your price. It's going to push price up. When you're south of it, it's going to push price down. Okay, but you've got to go to battle with the bigger team. All right. So we went to battle with the bigger team. It got us through the 9 EMA. It sat up here and it rolled around in here. And which, by the way, this would have been a great place to do it, to add to your position if you wanted. I didn't. Okay. I was just excited. When this candle here, this green candle finally broke the top of this candle right here, then I moved my stop to here. Okay. Then we went sideways. And then when this candle here broke the top of these, you can see sideways right there. You can see where the resistance is. It's not very hard. It'll always be the pivot that pushed you back down. That's going to be your high point pivot right here. That's going to be your resistance level right there. That's your resistance level right there. Once that broke, boy, Katie barred the door. You understand what I'm saying? Now you're printing money. So, because you had that rotation back above the 9 EMA, you had to pull back into the 9 EMA. You have that pivot point over here to your left. That was your pushback into your 9 EMA. That's now going to be quasi resistance, and when that breaks, you should anticipate you're going to be gone. Okay, and so, wow, you put your target there, Bob. Why'd you put your target there? Well, because because do you not see the reaction when price gets there? I mean, I got out. It probably cleared my target. It probably cleared me by maybe 1 or 2 ticks. Now I kept my target just below that red. I didn't want to even risk that I was, the term is don't be a dick for a tick. Okay, so I had my target below that. And then as soon as I got filled, and then bam, look at that candle. Now, what did it do? Here's the interesting part. What did price do? This is very interesting to watch this. Okay, here's your first test of your 21 5-minute SMA, right? Bam, back into your 1-minute gold line. Your 1-minute gold line, reversed it back up, over, boom, dang. So I talk about how this could be a potential swing trade. Also, this trade right here, because look what price did. It went all the way to the daily high. But why did I not do that? Well, because the bottom line is I knew we were going to have a big reversal right here. I mean, that's resistance, at its best. Just like once you get above it, it becomes support at its best. See that? Does that make sense? It becomes support at, see how it becomes support? This 21 SMA becomes support. Boom, there you go. So when you reach for the 21 SMA, you should anticipate it's going to kick it back. And that's exactly how I took that trade. So now let's talk about another instrument. What's another one? RTY. Okay, RTY had that crossover retest. Well, this is a crossover retest also, but it had a shorter time frame one. So let's talk about that. To the downside, by the way, while NQ's taken off, RTY is rolling over. And can you have the confidence to be short in one and long in the other? I don't know, not unless you know why. So here we go. Boy, the RTY really, wow. When it finally crossed over. See, by the way, here's a little crossover retest of the overnight. Oh, helps if I have it over here. Here's a little crossover retest of the overnight open. Look at that. Look at that. Holy crap. Look at that. Look at that. This line, this magical line right here. This magical line right here. I didn't take that trade. This was at 11:45. Price blew through, came back, boom, gone. That's hundreds of dollars right there. And what did it do after? Well, it sat there and waited for this 21 SMA, and there it is, off it goes. Let's talk about the trade I took. All right, so let's talk about the trade I did take off of this line. So what we did is we had price go through the overnight open. Okay, you had price go through the overnight open right here. Okay, and then at what time? At 10 o'clock. Okay, so at 10 o'clock, you had it go through, and it came down, and then it did this right here. See this candle? See this candle? This candle? This candle? It reached to the bottom of the overnight open, which I wasn't paying attention. So I was too busy patting myself on the back because of my great my great NQ trade. I wasn't paying attention. And then I just happened to look over at the chart and I went, oh crap, there's an RTY trade I missed. Well, it rolled up and then it came back down. So I put my entry right here on this candle. I should have been in on this candle. Okay, that's full disclosure. And then I was looking for the for price to push down and go inside the bottom of that 9 EMA. Okay, which see how it did that. It got into a bat. This kind of what I was talking about before. When this short happened, it got into a battle right here with the 9 EMA. The overnight open got into a battle. Ultimately, the battle was won by the overnight open. Price came down, boom, up inside the 9 EMA, and then down price goes. And then it came up and it went inside. Now, when I was sitting here, this is a $5 instrument, so I'm not freaking out that much. And it doesn't move like the NQ, where holy crap, 1 minute you're up $400 and then you're down $100. It's nothing like that. So I can be a lot more cautious on this trade. Anyways, so what I did when I got in is I put my target down here at the bottom, because now my 21 SMA is north of me. So I don't have it as a target. So what did I use as a target? I used the pivot that rotated up into here as my target. So I had my target sitting down in here. All right. Anyways, but because I'm looking for swings, I'm looking for this thing to make some decent money. So anyways, it rolled down, rolled up, and it went inside this 9 EMA. And I said to myself, okay, if the top of this candle breaks, I'm gone. So when this candle closed, I put my stop here. It rotated down, stopped right here, and I was like, okay, I'm done. Because my target was right here. Don't be a dick for a tick. I got out, boom, there it is. So I think I got like I don't know how many ticks I got on that. I don't know. That's a pretty good sized trade though. Let's see here. Do I have the numbers? I have 42.1 and 37.4 minus 2 times 5 times 10, $470. $470 on that trade. I was probably trying to get about 550, something like that. So anyways, then what happens is it didn't do that. Blows right through that overnight open again. Now you got to have a consolidating day for this thing to work, because price has to be around the overnight open. Blew right through it, came back, tested it. Wow. Yeah, that would have been nice. You had everything lined up. You were north of this. You had your 9 EMA here. Boom, boom, boom. Wow. Now, one of the other things I want to talk about is time not to trade the overnight open. That is in the afternoon. You don't trade the overnight open in the afternoon, because price has a tendency to roll back to the overnight open in the afternoons, in my opinion, a lot of times as an equilibrium place, and it just settles there. There's nobody manipulating it long or short or anything like that anymore. All the traders are gone. So you really want to focus on this thing, in my opinion, for the equity markets between like 10:15 to maybe noon, and then gold and oil, not much different than that either. Okay, so let's talk about gold. That was the one that I took, the other trade I took. So I got those two winners there, and then I had gold. Boy, gold took off today. Jesus, holy cow. Wow. All right, so here's the gold. That's the That's the really good gold trade I took today. That's where I made all my money, but that's a different trade. How much confidence did you have in it, Bob? Oh, I don't know. 1, 2, 3, 4, 5 contract confidence, maybe. Anyway, so let's talk about the overnight open. Here we go. So let's talk about the crossover. So we had it tested here. So this was at like 8:30. Now we're at like 10:30. So to be perfectly honest with you, I wasn't completely sold on this trade. Okay. And we had this huge candle that reached down here and almost hit it, then rolled up, and then came down, and then rolled up, and then it reached. Well, I was kind of like, damn it. I already had a big win in NQ. So I said to myself, well, all right, I'm gonna be pissed if it flips here and runs back to the 21 SMA and I don't take it. So, I did a buy stop. I dragged it down, entered it, and then I made a mistake. What was that mistake? Well, to me, it was a mistake. The mistake was I did it with 2 contracts, thinking I did it with 1. So I entered this trade with 2 contracts. And it ran right up, as you can see right here. And I freaked out a bit. So I closed out one of the contracts. I think I made $220 on that one. I mean, it just and I was like, oh shit. And then I brought my second one up to here. It rolled over, took me out, break even. So I made a little bit of money, but the whole point was reach. We had, again, 2 candles. We had an inside candle also next to this one. So the green candle was all inside this candle here. And then wham. I freaked out, which turned out to be to my benefit that I freaked out, because I ended up making some money that I wouldn't have made otherwise. But that was not the intent. The other reason I wasn't sold on this one is because we had been here at 8:30. Granted, we did come from the daily high down to here, which is visually is important to me in that moment, to glance to the left and see we're coming from the daily high, because that means we didn't have a lower hump down to the mid band, down to the overnight open from the 8:30 one. 8:30 created a new high, then we came down here. So we could potentially be rotating back to another new high, which, by the way, is exactly what they did. But I didn't do that. Okay, I didn't do that. But that is exactly what they did. This trade, this overnight open trade, which that one was at 10:30. Okay, so you got the times of all 3 of them when they happened today. That overnight open trade right there, if you don't have trailing stops with Apex and that stuff, or you're past your trailing stops, your drawdown and all that kind of stuff, and you're trading with Apex, these are the trades you can take these and take them back to the highs. As you can see, that's what happened here. That's what happened in RTY. That's what happened in the NQ. They went back and created new daily highs. So those are some huge swing trades off of a specific point that you pivoted in the market, that most people don't even know that line exists, that spot exists. Anyways, I hope everybody has a good day. I am working on my automated open range break. God, brain dead. Open range break strategy. It's almost done. I'm adding a feature to it, and then and I'll be showing that to you guys. I'm probably going to buy some accounts and just trade it, and then just show the results every day. But you don't need any of those things, folks. Watch the video down below and watch this one over and over again. Take copious notes and make yourself some money. All right. Talk to you later. Bye.